Federal Reserve policymakers agree to take, quote, cautious approach to the economy moving forward. This following Trump's tit-for-tat tariff plans. The central bank released its minutes from last month's Fed meeting. This happened on Wednesday, and that could mean holding off on interest rate cuts if inflation does persist. But the Fed could also opt to cut rates if the economy needs more immediate relief. The Fed cited increased economic uncertainty, raising the inflation outlook for the year. It now also projects only 2 quarter-point cuts for the remainder of 2025. Okay, let's get some more insight into what is ahead for the Fed as we move forward with the Trump administration. And for that, we're joined by Peter Simon. Peter's a professor of economics at Northeastern University. Peter, great to see you again.
Thank you. Nice to talk to you.
Okay, I guess it's no shock that the minutes show the Fed universally agreeing turbulent waters are probably in our future, slowed growth coupled by potentially higher inflation. So what does the Fed do at this point?
Well, I'm assuming that the Fed will do nothing. It's certainly not going to lower rates. The unemployment rate is below full employment. The inflation rate is creeping up a little bit. So the last thing that they're going to want to do is raise rates. So I think they'll just probably hold steady. They probably won't lower them or raise them as a result of what the economy is. And given the uncertainty around the world right now because of these tariffs and the threat of them, they're probably just going to stick with it and see what happens.
Yeah, and most presidents, except notably Trump, take a hands-off approach on the Federal Reserve. But Trump is calling on the board to lower rates and do it now. Does the information out there right now support dropping rates?
Well, no, it doesn't, because the inflation rate is starting to creep up. It's 3.1% if you look at the core rate for February, which is the last thing the Fed wants to do is incite even more inflation. So cutting rates isn't going to happen, and we're below full employment. We're at 4% unemployment rate, and full employment is 4.2 or 4.3%. So there's virtually no reason that the Fed would want to decrease interest rates. It would increase. It would have the tendency to increase inflation, which is the one thing that the Federal Reserve Bank is the most concerned with, inflation. So there's no justification. The only reason that the president was asking the Fed to lower rates was to try to compensate for the downward effect of these tariffs. Now that they've been put on pause for 90 days, then that's going to take a little bit of pressure off the Federal Reserve Bank to try to act more quickly than it would otherwise act.
But the pause, the tariff pause, that's kind of what I'm kind of getting at and how the Fed moves forward, because it's just not clear. Trump can change directions dramatically at any moment, given which direction the wind is blowing. How difficult is it to set policy when something like that is going on?
Yes, you're absolutely right. And that was why the stock market keeps going up and down and up and down, because no one knows. The market system, capitalism and the market system and the stock market, the one thing they're mostly concerned with is uncertainty. They don't know what the future holds. And this president is known for this, of keeping everybody uncertain about what's going on. So the Federal Reserve Bank and businesses aren't going to move much. They're just not going to make any long-term plans. They're not going to change anything that they don't have to, because they're just not sure of what's going on. And this 90-day pause of the tariffs doesn't remove every threat, because
Sure.
It's still 10%, and on China it's quite high, over 100% now. So there's going to be some change in production. We're not going to buy as much from them. They're not going to buy as much from us. That's going to cause a recession to some extent. It's possible, and even with Canada and the other countries. So nobody really knows.
Yeah, and using that R word.
What is going to happen, and that's not good for business.
Yeah, and using the R word, like so many economists are out there right now. The Fed in its minutes showed that it only expects to have 2 quarter% cuts this year. What can the Fed do? I think a lot of people had hope for more, but again, we go back to it's impossible to predict what to do until something solid is in place that isn't tweaked every single day.
Right. They would have to see some definitive change. So either a recession, in which case they might then cut rates a little bit more quickly than otherwise, and maybe more than twice. It depends on what's going on. Or they have to see a real drop in the inflation rate, something closer to 2%, not 3.1%. So they have to see something definitive before they risk inflation. Decreasing interest rates comes from a huge increase in the money supply. That generally tends to increase the inflation rate, which is the one thing the Fed is mostly concerned about. So they're not going to do it without a very good reason, and that would either be a inflation rate coming way down in the next 90 days, or the economy going into a recession, neither of which are probably going to happen in the next 90 days.
Okay, let's talk about the relationship between Trump and the Fed chief, Jerome Powell. Powell's promised that he is not going to leave, and this is one case where Trump can't fire someone because he wants to. So is there a scenario in which the Fed chair would leave before his term ends? That said, Trump can appoint new Fed governors in the coming months.
There's nothing that would force Jerome Powell from actually leaving before his term ends, which is a year from this May.
Right.
Trump could ask him to. If he told him to, I think he would probably resist. He could ask him to, and he might actually then decide to resign. That would give Trump an opportunity to put in someone who is going to do exactly what Trump says. And that would be relatively dangerous, I think, as is the case with much of our government right now. So I think I don't think Jerome Powell would leave under any circumstances until his term is up, which is a year from May.
May 26, exactly. Peter Simon, always a pleasure. Thanks so much for your insight.
You're very welcome. Thank you very much.